Hey there, Dan Edwards with the Eastside Real Estate Team, and I thought I would do a quick video because I wanted to share with everybody my perspective on what's happening in the real estate market as it's affected by the raise of the Fed, 3/4 of a percentage point in interest rates, and what to expect for both buyers, sellers, and real estate agents out there. So I have shared with your screen my trend graphics report, kind of going over the inventory fluctuations. Let me just talk first about the economy and about the interest rates and where we can expect to see them go. I think that nobody has a crystal ball, myself included, and I don't know how the markets will continue to react to the volatility that we're having, but I know that that one thing is clear. And the truth of the matter is buyers and sellers can't control that. There's nothing we can do about it. All we can do is try and get creative in how we help buyers and sellers navigate this current market. So I brought up this on my screen here, our kind of East Side market report. Let me kind of blow it up a little bit more so that you can see better, because it's got some stuff over here on the side. And I went back 4 years because I thought it was important to get a level of perspective. Like where we're at now is very interesting spot, and it feels maybe painful to sellers that have these expectations built up over the last couple of years of what and how the market would react to their home being put on the market. So take a look at going back to 2018. Now, just to be clear, 2018, 2019 were also sellers' markets, meaning that the balance of inventory was in their favor. So one of the things that's important to just note is you can see here in 2018 and 2019 that the available homes for sale far exceeded the ones that went pending and sold. And you can see across the board that the pending follows the chart of available homes sold. So mostly homes are not falling out once they got pended. So it shows a robust market, but look at that gap. Look at the gap that you see between the available homes and that. It means that even in those seller markets, they had a wide gap of homes. Now, let me just take this, transpose this on list price or days on market and list versus sold price. I'm going to click that link. So you can see that the sales price to original list price kind of in 2018 and 2019 dipped below, and this is on the east side, okay? It dipped below that 100% mark until the average days on market starts dropping, and you can see that the inventory, if we go to the first slide here, the inventory starts to go down as far as here, right here in September, and I remember this because we had a house stay on the market a little longer in August of 2019, and then all of a sudden interest rates dropped, and all of that available inventory got sucked off the market, leading into the 2020. What happened in May of 2020? Yeah, we locked everything down. So inventory kind of spikes up over sold properties. And then for the next 18 months, I think, we started to go on a tear that was unusual and unprecedented. So the history, the most recent memories in history that many of the sellers that are going on the market right now have of this market that actually was not a normal market in any sense of the word. It was an not overhyped, but an underserved market from the way of inventory. What's totally interesting is to see the for sale by properties actually be less than the closed. So what we had is an acceleration of every single home coming on the market selling. Every single home coming on the market selling, even down to where the end of this year, inventory was so low that people were getting astronomical offers. I think it's good to look at this to have some perspective. Now let's take a look at the months of inventory and how that has kind of gone. So here we are. This is still considered a seller's market in 2018, and we go down to this extreme seller's market down to December here, right? Of 2022, and we pop up some inventory, and this is where we're at. Now, it's conceivable that this is going to start to balance itself out and look more like 2018 and 2019, and it may keep going in that direction. What sellers are going to need to understand is it's going to take about a month or so before you may end up selling a home. It might take more, but you need to be compelling. You need to be able to know that your product, the property that you're putting on, is the belle of the ball. So get with your real estate agent, and real estate agents, this is what you need to do. you need to pull up a list of homes that are actively competing in that price band. And it may not be in the exact neighborhood. It might be around the corner. It might be up on the plateau. A home in Sammamish may be just as desirable as a home in Redmond. So look at that price band and see what the competition is, because that's what buyers are doing. Buyers are looking, right, to say, how does this home compare to this home here? And they may be in different cities. They may be Issaquah, maybe Sammamish, right? It may be Bothell. So kind of look at those price bands and put yourself in the mind of a buyer and consider what they're going to do, because they're trying to make their money go further. And that means they're going to look at a wider area. Now, buyers. Now, there may be some buyers that are like, I'm exhausted. I'm just not going to do this. I can't believe I can't afford this anymore. Well, get creative, and agents, get creative with how you're writing contracts. Sellers can provide credits to buyers that can apply to what we call a buy down, which actually buys your rate down and helps you afford something that you think you're now priced out of. So get creative with your lenders, get creative with your agents to configure those offers. And here's the cool deal is now you have some choices. Now you can do subject to inspection. Now you can buy a home contingent on the sale of your home. And we're into a place that allows a buyer a lot more flexibility, and you can be a little bit pickier on the product that you end up, or the home you end up in, product you end up in. So, I have to say it's an exciting time. It is stressful. And I'm happy to talk to anybody about what their unique situation will look like. Agents have to be professional, and they have to be experts. They have to get in there and understand what these numbers mean to their buyers and sellers. If you don't do that, if you just expect to put a sign in your yard and sell it, it's just not going to happen. So that's my take. We can never have control of the circumstances. We certainly can have control of our reactions to the circumstances. And I got to say, rents are going up. So if you're thinking, forget about it, I'm just going to go rent, just keep in mind, interest rates may be high, but when you're renting, you're paying 100% of somebody else's interest, right? So keep that in mind. Good opportunity to be a buyer, be creative. Sellers, hang in there. Your home's going to sell. Make sure it's compelling, keep an eye on the market, and be proactive as a seller. That's all I got for you. I hope you found this useful. If so, please share, like, and subscribe. Thank you.